Morning, everyone. Today is the 27th of February, so it's almost the end of the second month of the year. I hope you guys are having a great month so far. Yes, welcome to another weekly market analysis. My name is Pedro. I'm the senior market analyst at Alphachain. And what we're going to do again is to take a look at what happened last week. How did the market reacted? Any big catalysts that affected the market? And pay attention as well to what can you expect for the week ahead, right? So where are going to be maybe good opportunities in the market to look for? So starting from last week, there were some news. It was a little bit quiet. We had, for example, PMI data coming out better than expected across the different countries in the UK, in the Eurozone, in the US. We had New Zealand interest rate decision, another 50 basis points hike. At this point at 4.75, the interest rate, which equals the interest rate of the US. So both of them at 4.75, they are the highest. CAD is at 4.5, in the UK at 4%, Australia at 3.35, and the Eurozone at 3%. While Japan is still negative, it still continues with the same situation. Looking at Japan, for example, we had CPI at 4.2% coming out last week as well, which is a concern, right? So because they have their target at 2%, it has been on the rise for the last few months. As you can see, it escalated from the 2% target that they have. It has been escalating, and at this point, it went from 4% now to 4.2%. Slightly lower than expected, but it's still higher, and it's still in this upward move. Something else in Japan is that we had for the first time the future government of the Bank of Japan. So he made a commentary in the House of Japan, something like that, for the first time. So he's going to take charge starting in April. But at this point, we are starting to listen. We're starting to make some to appear in some audiences to explain maybe his views. Something that the market was expecting was a little bit more hawkishness from his commentary, but apparently it kind of stays neutral and kind of keeps the same, right? Everyone was expecting to see finally Japan to change their monetary policy, to stop with this easing and to control and to have the 10-year bond government yields at 0.5%, and to kind of hesitate a little bit to try to start controlling this rise on the inflation, for example, which is a concern. But at this point, apparently, there wasn't haven't really have a change on the commentary from that side. So the tonality is still a little bit more dovish than hawkish. We'll see. Maybe after April, when he actually takes charge of it, if something different is going to be announced in there. And because of that, we actually saw the dollar yen completely spiking to the upside with the weakness on the yen. Yes, so that's a little bit on the Japan side. Now in the US, the concern, of course, last week, and it's going to be continued to be this week, which is the geopolitical pressure that is going on between the US, China, and Russia. So regarding to the Russia and Ukraine invasion, which last Friday, it marked 1 year since Russia initiated the invasion into Ukraine. So it has been 1 year so far. Let's see for how long this is going to continue. But yes, there was those threats announced by the US, saying that maybe China was supporting somehow, providing some military equipment to Russia. and Russia apparently, and not Russia, China now, it came out with a 12-point peace proposal last Friday to try to be a neutral mediator in the Russia-Ukraine conflict. Of course, that may not be accepted by the US. We'll see if it's going to be or not. However, Ukraine's president Vladimir Zelensky actually is open to have a conversation with China, kind of have a ceasefire plan and meeting with China's president to see how that can play out. So there's a lot of tensions going on in that side, kind of to kind of balance a little bit, since it has been a little bit of a weak data coming out during these last few weeks, a couple of weeks. Now we have all this tension in the geopolitical part between US, China, Russia, and so on. So let's see how that's going to play out, and how the market's going to how this situation is going to impact the market in the next few days, the next couple of weeks. Something else, of course, that the main data that came out last week, it was the core PC in the US, right? So this is one of the inflation data reports that the Fed pays attention to, and similar to the CPI data, it came out slightly higher than expected. And aside from that, it was actually revised to the upside as well from the previous months. So previous month was at 0.3. It came out actually in a revision to 0.4, and on a monthly basis, it came out at 0.6%, which at this point keeps the core PC at 4.7 year to year, which is way expected. It's way above the expectation of 4.3% than the market was pricing in, and this just leads as well in the same direction, right? So again, a little bit hotter inflation than expected. Same thing happened with the CPI, and this just leads for the market to eventually start adjusting to what the Fed has been predicting. Right? If we take a look at the interest rate and what is being priced in by the market at this point, if you remember when it showed this one a couple of weeks ago, basically the market was pricing in the Fed that would hike until 5%, and then most likely to stay there. And even during this year in 2023, we would have starting to have rate cuts in the Fed, and maybe finish the year at around maybe 4.75 or between 4.5 and 4.75. This was kind of the prediction of what the market was pricing in the beginning of the year back in January. But now everything has changed since we have this new data coming out, and that's why the Fed always says it's going to be data dependent in order to make decisions, and the market finally is adjusting. Like we also had, we talked about those two different scenarios. The Fed, anytime someone was talking about it and the Fed Chair Powell was mentioning it, yes, the rates to go above 5% and to stay higher longer, right? At least not expecting any rate cuts during this year, only in 2024. That's maybe when the rate cuts going to start. And then there was a market that was pricing in just the Fed to hike until 5%, and with the rate cuts still during this year, apparently. And we kind of asked the question, like, which one is going to kind of start giving up and adjusting and moving towards the other side. And apparently it is the market that has been moving and towards the Fed prediction, which is going to be interesting, right? The next meeting is going to be on the 22nd of March, if not mistaken. And yes, aside from this, during this meeting, there's going to be another plot dot predictions of what the Fed is expecting for the next few months. And this is what we have at this point, right? So at this point, it's basically 73.8% is expecting 25 basis points. However, there is already even 25% possibility of having a 50 basis points hike in that meeting. And as you can see, if you want to compare it, 1 month ago, it was basically 0%. So no one was even giving the possibility of having a 50 basis points. At this point, it rose already to 25, higher than 25% chance, right? And there was even slightly a possibility of even keeping at 4.75, and now basically it's assumed it's going to go from for 5%, right? From 4.75 to 5%. Even if you continue now moving forward, for example, in May, another prediction. So this is where it starts the difference, because the market was expecting to stay at 5%, and now basically the market's already with it close to 70% prediction of another 25 basis points for the market, for the interest rate to go for 5.25. Again, with maybe 30% chance of still being around between 4.25 and 5.5%. Is this in June, this in May, and now in June again, still 55% expecting at least to be at 5.5%. So basically what the market is saying is that is expecting the Fed to hike at least 3 more times at 0.25%, bringing the interest rate, which is at this point at 4.75, towards to 5.5%. This by beginning of summertime. Right, so this is what the market is pricing in at this point in the summer, and then kind of to stay somewhere in there. There you go. The highest percentage is then for July, on the 26th of July, next meeting, to stay at around 5.5% without any more hikes. So 3 more hikes, and then that's the peak, and then kind of to stay at this rate, most likely for the remaining part of the year. As you can see, it's still where we were, 5.25, around 5.5%. As you can see, even in November is still where the highest probability is, at 5.5%. Even December, if not mistaken, I think that's still around the highest percentage for the remaining of the year. So this is a big change, and that's why we have seen the bond market and the equities changing and starting to see this decline in the equity markets during this month of February. It's basically the market finally adjusting to what the Fed has been saying, and everything all the data that is coming out with strong job market, with the strong data coming out, with the PMIs coming out as well, GDP coming out strong as well, good data on the housing market. So basically, and the inflation starting to show signs of increasing again. This just leads for the Fed to keep doing what it's doing, and most likely continue these hikes for longer, and then to keep the interest rates higher as well at that rate, until they finally see proper the inflation to move down. So this is one of the biggest adjustments that we have seen during this month of February. Slowly price has been adjusting, or the market has been adjusting to what the Fed has said, which is something similar that happened back in August last year, and that's when we had also a big sell-off in the equity markets, with indices coming down after getting that mid retracement, mid high of retracement in August. That was said they need to start moving down, eventually created a new low for the year. So yes, this is where we are at this point. Next week, there isn't that really many big data coming out, just some manufacturing PMIs on Wednesday, and then services PMI on Friday. Aside from that, nothing much. Of course, keeping an eye on unemployment claims is going to be important, which keeps being strong below 200K. Eventually, you are going to start seeing this number going upwards, which is going to lead eventually to the unemployment to start going upwards. Actually, it's just going to start seeing this number going down, which is going to lead the unemployment to go higher. We have the CPI as well in the Eurozone. And basically that's it for the remaining of this week. NFP this time is not going to be on the first Friday of the month. It's going to be afterwards. So it's postponed for the 10th of March. That's when we are going to have the next NFP data coming out. And that's basically it in terms of the big news. So let's take a look at how the market has been reacting to it, right? This is the VIX. We can see the VIX that was touching a little bit the 17, retesting the lows from the beginning of last year, January 2022, and now is moving again to the upside. Let's see if with this decline on the equities, if the VIX as well is going to start rising. Last year, maximum 22, it was around this 35, 38 level, never really managed to go above 40, which in theory it would lead to chaos in the market. So it's sustained at around that level, 38 to 33 level, and then kind of anytime it retests that level, it will go down. And now at these lows, let's see if price would go back to 30s or close to 40s. Like that most likely would lead to the indices to move to the downside. So here we are, right? So we have a negative week in the indices with price falling, basically spending all week moving to the downside, and now it's retesting this interesting trend line that goes all the way back to the highs, to the higher highs from last year, and now it's retesting in here. So let's see if there's going to be a little bit of a reaction to the upside. Again, we managed to break below the 4K level on the S&P. Maybe that can be used now as a level of resistance. The price may continue to go down. Let's see. Personally, I may see price going slightly lower instead of just pausing in here. I see this one kind of as an engulf down. So I'll be looking for price to eventually continue to move to the downside. Question mark is from where? This level in here extracted from a really good level of supply. Nevertheless, as I mentioned a few times, I could still see actually price had moved a little bit higher before the drop. That hasn't happened just yet. But yes, I would like to see actually S&P at this point to continue to move a little bit lower. We have Nasdaq. Yep, Nasdaq is reacting from this good level of supply. It had broken this trend line, which kind of led to the move to the downside, similar to the S&P. Nasdaq, between the three indices, Nasdaq, S&P, and Dow, Nasdaq is the one that I'm a little bit more bullish because we actually indeed managed to break this low, this high, sorry, which kind of maybe it's still a little bit more room to the upside. Maybe this could be a good level for price to do that. Our price may go a little bit lower before it can go higher. So we have been moving to the upside since this low in here. So beginning of January, it went all the way up until the end of January. Beginning of February, we started to move, and they have this negative turn, right? So tomorrow it's the end of the month. So let's see where price is going to end. If we actually draw Fibonacci in here, we can see more or less how much of the retracement price is moving. A little bit close to the 50% retracement, already below the 38.2%. So maybe around 50%, and maybe we can continue to go higher in here. Of course, keeping an eye on everything else that price is doing is important. What else? So let's see where the Nasdaq is going to move to. It's going to find still this level in here of resistance and then continue to move down, or are you going to manage to break this size, which can maybe open the door to go slightly higher. And then we have the Dow Jones, right? So the Dow is one that we have been predicting for the last few months, still looking for price eventually to reach this level. We talked about how this zone in here, that price took the highs, kind of moved to the downside, started breaking some lows, so opening door to go further down. It broke finally this zone in here, opens the door to go further down, and now the next zone, of course, is this lows in here, which is basically where price is reacting right now, right? From this is the last demand zone in here. Price is holding it, and yes, if we do eventually manage to break below this level, most likely we are finally going to go to this level. So this Dow, it's one of the indices that have been more bearish in terms of what I could see from price. Price has been respecting it quite nicely, while we saw Nasdaq and S&P still breaking slightly mid-range highs. The Dow hasn't done that. and maybe we can actually see price eventually navigating towards somewhere closer to this level. So let's see how price is going to react from this level in here, if this can manage to hold price to the downside or not, or if price goes even a little bit higher in there. But yes, this demand zone here was still fresh. None of these lows managed to kind of go there. So that level, it was left behind, and now price nicely reacted from there. But yes, keeping an eye in here. Let's see how the US Open, how price going to react to the US Open. DAX is another one that we have been looking at. So price finally broke a little bit below this demand, these lows, and it reacted from most likely this demand zone in here. So we had seen this engulf down. Price indeed reacted from there, and now it reacted from here. On the DAX, as I mentioned, I do like one level just next to it, just above it, to go above this high, maybe some reaction from here. It will be interesting to see price maybe going there. Nevertheless, we still have maybe this level in here that could hold price. This eventually can be seen even as another engulf down or price pushing down. But yes, looking for price to maybe go a little bit higher, not taking everything, all the others from here, eventually react from there and moving down. That could be interesting to see on the DAX. Now, if we pay attention to the dollar, right, it's completed basically, right? If you have been following what we have been saying for the last month or so, so this is exactly what we predicted, right? So first of all, waiting all this time for price to take these lows and to take the low from the left side before the turn. So that happened when we had that FOMC, ECB, BOE, and then the NFP in the beginning of February, and we have had basically a full bullish moment, a full bullish month in the dollar, right? Since the beginning of February all the way until the end, price has been just on the rise, and we finally reached this destination that we have been talking. So this was the space initially that we were looking to be filled, and it's slowly in slow movements, it reaches its destination. So here we are retesting this level from the 6th of January when we had this previous level of NFP, and let's see now what the market's going to do, right? So the prediction to go higher, that has been done, and now question mark is, how is the market going to react from here? Are we going to respect this level, these highs in here, and find resistance in there and start to navigate to the downside? Or are we going to actually break this level of resistance, which may open door for price to go even higher from this level towards maybe something in here, or eventually to actually fulfill all this level all the way until there? So that's now what we need to be paying attention to. How is the dollar going to react around this level? I could still see price going a little bit higher. There's a little bit of a zone in here that was left behind during the NFP. Price today hasn't really reacted from there. So eventually I would like to see price going there. Next level in here as well, pay attention, as zone of support could be somewhere in here, could still lead price to go a bit higher from this level. So price could retrace in here, find now some kind of support between this previous level of resistance, and maybe go to the upside. But yes, question mark is, how is the dollar going to react from this level? Are you going to break it above it, or are you going to respect it and move to the downside? Something that you mentioned as well during this move to the upside was there are 2-3 levels where price could react from, that could find some kind of support and continue to go higher. When price made this move upwards, we mentioned it would be, yes, this level of previous level resistance support. Next level could be somewhere in here, or then in the end, the total origin of this move, which kind of between these two spaces in here, right? So this one has been done nicely. There's maybe still something in here now for the future. Eventually, this could be almost all compressed down and price can navigate to here. If you maybe break below this somewhere in here, maybe that can open the door for price to make this move down. So yes, and something that didn't happen here was a deep retracement. Like the only thing that we had was just a little bit of a retracement towards this level and then press continue. So during all this move upwards, we never had that deep retracement, maybe somewhere closer to here or a bit closer to the lows before doing that. So something that could happen is, for example, price could go break these highs, show indication that it wants to go a little bit higher, but before then it actually continues, starts moving down, maybe have that deep retracement, and then finally can move upwards after that. But let's see what the dollar is going to do. It's just an idea to what we can pay attention to as price is evolving. Yes, so this is the Euro index, another one that you pay attention to. Again, it reacted quite nicely from that level on the left side that we talked about for the last few months. And after that, it's starting to move a little bit to the downside. Personally, in terms of the spice, again, as I mentioned, kind of looking a little bit towards to this low as a potential target, which then eventually actually could lead price to go a little bit lower. For now, of course, price is reacting from this demand zone. We kind of still have this level in here as well to pay attention to. We did broke above this level, can lead price a little bit to the upside. This highs looks like this stopped a little bit, didn't really reacted from that level. Our price could even go a little bit in there. So let's see if this level is respected and price may goes a little bit higher before maybe turn to the downside, or by any chance price just respects something in here and it starts moving lower. Of course, I would like to see now a confirmation of breaking these lows that can actually open the rest of the spice towards that level. Right, so that's something to keep an eye on in here to see if we're going to have more weakness on the euro. And then the yen, right? So the yen, as you can see, last Friday after the governor of the Bank of Japan spoke, and with the CPI as well coming out stronger as well at 4.2%, we had another sell-off on the yen, which is something that actually we were expecting, if you remember, from last week, because there was literally this price to be filled and price kind of navigated towards there. Now, price may have already had a little bit of a reaction from here. It may just continue to go a little bit lower. We do have this demand zone. The price may just go even below that and can kind of target, start moving even below that level. But it's important to see how price is going to behave around this level in here. We have this specific demand. If you start breaking below that level, maybe there's a bit more room to the downside. So let's see how price is going to react from here. But this was another one, since you had kind of the break of these lows, that we were looking for price to fill this price that was available in between these two levels of structure. And there you go, the yen finally, it reaches that level. So keeping an eye now on the individual currency pairs, the euro, similar to the dollar, it finally reached this level in here from the 6th of January, and this price has been reached, right? So this is something that you're looking for. Initially, it was just until here. After we break this level, price, there was space indeed to go towards that level. Now it has been a really strong compression. This is maybe one of the last zones in here that is still fresh. So let's see how price is going to react from there. Otherwise, maybe we can start noticing some kind of move to the upside on the euro, right? So price has finally reached this level. Now it's actually a good level now where the lows reacted from. There's maybe a little bit more zone underneath where price eventually could go to, but for now, today, price basically is respecting this level. It just took slightly the lows from Friday and price reversed. So let's see eventually any kind of reaction there. Aside from that, everything was a little bit compressed in here, and then kind of price could go a little bit higher. And similar to the dollar, it didn't really had any specific or strong or deep retracement on the way down. Price kind of just paused in here. So there's still that scenario where price could go a little bit higher in here, find more sell orders, and then maybe continue. At this point, yes, to give a little bit more confirmation to look for sales, it would be nice to see this low being taken on the euro to continue to then eventually look for more sales as price may retrace to the upside. But this is a really strong level of compression, as you can see. maybe this one is still fresh, maybe somewhere in here is still fresh. Aside from that, basically everything has been taken, maybe all the way until here. So basically all this is almost all the way compressed until that level. So that could be something to maybe look for this week, or whatever price finally kind of breaks a little bit above it, we may have all this move to be done. So let's see in here on the euro what's going to happen. But yes, overall for the last few weeks, space has been filled. So that has been predicted and it has been done. Pound, as you mentioned last week, pound was the only one that had already reached this level last week. Aussie, dollar, euro, yen, and so on, like they haven't really reached that level, which they did last week. So yes, here we are, and because of that, basically we could see that the pound basically hasn't really broken this low yet. It went all the way up, and now it's retesting it, creating a double low in here. And let's see if these lows are going to hold price to the upside. There's still maybe something in here that price could eventually go to a little bit below this level. So even if you break, create a new low, this is still kind of the zone that you are looking for in the bigger picture that can still hold price upwards. And the way price and the way pound actually has been moving as well, a little bit under compression. There's something in there, compressed. So we'll see if you do have any turn happening in there. Sorry. Aussie, continuation to the downside. It basically is breaking the lows. Aussie, I could see it going a little bit more to the downside, targeting this wall or even that one. Now this is still maybe a good level of demand in here that was still fresh. That's basically where price has been reacting it today, and maybe can go and see a little bit more room to the upside. Then we have all this structure in here that can push price down once again, right? But again, it's another one that we've been looking for, and price is finally filling those zones after we had that reversal again from in the beginning of February. But yes, this may be maybe a good zone in here to see a little bit of retracement. Even if you break above this highs, maybe can go a little bit higher, but then we have all this level of structure in here to look for. Yeah, that's a little bit for the Aussie. The same token that Euro Aussie may still see a little bit more room to the upside. This high kind of is already an engulf in here, showing indication to go higher. We also had the break in here, price respecting these lows, and after that kind of just navigating. So maybe Euro Aussie to go a little bit higher, while Aussie dollar to go a little bit lower. It just makes sense due to the way they are correlated. And the dollar, right? So dollar yen, and we were looking for price at least to go until here, which can still actually go a little bit towards the supply level, which is basically what price, it looks like, is navigating towards to, which then can even go slightly higher in the future, can even take this size and react from something in here. Yep, so let's see, price is kind of ranging a little bit. As you can see, we are not taking any lows. We respected it. Actually, this is the first low that was taken, and eventually this could be a space to be taken or to use as a target. But for now, maybe price first wants to go closer to this level in here before the turn. So there's maybe a little bit more room to the upside. Price may retrace towards this level in here and then go higher, or there's still this demand zone in here as well below this spike that occurred last Friday. Yep, so there's still this demand in here that needs to be picked up, the same way that this demand in here was picked up by this one, and so on. And eventually we are going to turn, and this can be a natural target to look for, with price maybe going towards here and maybe continue to go higher after after that. And yes, we do have this previous level of resistance that can work as support in there. So let's see on the end. Personally, I think there's a little bit more room to the upside. Nevertheless, price could go a little bit down first before maybe filling the space somewhere in there. Maybe be careful with the base of this level in here. Yeah, something in there. So maybe in here could occur some kind of reaction just above all these highs. Could do something, and then price eventually could go a little bit higher. But the base of this can be interesting, or that one in there. So yeah, very end on the move to the upside is a little bit also influenced by what the yen, by what the dollar is doing. Euro yen, I think I could see it going a little bit higher as well, kind of a little bit towards that that zone, or even above, which with this size, maybe towards this zone. I think that's maybe where the euro yen is heading to. So yeah, that's basically what I'll be looking for, and maybe some opportunities when the price does react closer to that level. Right, we just broke out these highs. Price went a little bit higher, reacted a little bit from this level of structure. It went down, retest, collect some more orders, and maybe now it may be on the rise. Again, let's see. Let's see where it's going. CAD, it's on the way up, right? So it was another one, basically reached the same level of the 6th of January with the NFP. It managed to respect this low, so no break to the downside, which also had respected this low. So price has been respecting this level. On the rise in here, move to the upside quite strongly. So let's see now how price is going to behave somewhere in this level. If this level is going to continue to hold price to the upside, and if we are going to finally break this level of resistance, something that we haven't been managed to break, or CAD hasn't managed to break since the beginning of December last year. So let's see if we are going to be within this range in here, or we are going to manage to break to the upside on the CAD. And dollar franc Swiss, right? So dollar franc Swiss, it's another one that we have been bullish after this move to the downside. We turned the bullish, especially after price had broken this double low and this was in here that we had been looking to the upside. This was another confirmation. We slightly broke the highs, showing indication that it wanted to go higher. Price just respected this bit of demand in there. I was looking for price to go a little bit lower, but nice reaction from here. And after that, price has been just going to the upside. And maybe this is the range that eventually dollar franc Swiss may wants to feel. Now we just took this important high, so maybe there's an opportunity to look a little bit for a retracement towards this level, and maybe then after that continue to go higher. We have a few zones of previous resistance in here, can work as a support. We have this demand zone in here, and eventually I think price wants to go at least above this size in there, at least somewhere in here, but then eventually could continue to go higher and maybe getting closer to that level, right? We mentioned last week that maybe that continuation to the upside would occur when the dollar as well would have a little bit more strength, and basically that's what we had with the dollar franc Swiss moving higher. So yes, a little bit maybe more room to the upside after taking this highs, but maybe on intraday level, maybe there's a little bit of a chance of retracing towards this demand zone, and then maybe continue to go higher. Nevertheless, all this looks a little bit compressed. Eventually price could go somewhere in here and then continue. It could be another option in there. And gold is another one that has been just moving to the downside last week, and now it's approaching another level that we looked for. And one was in here, another one was in there, basically where a gold is reacting at this point, and eventually could go even below this level, somewhere close to that zone, if not going all the way until here eventually, and going below that 1764 mark. Although until here could be a chance for the final target of this move to the downside. Nevertheless, there's maybe some kind of retracement to be had in here. At this point, this could be interesting above there. A little bit of compression in here. So yes, eventually we're going to have a little bit of a deep retracement on gold and not just continue all this rally to the downside, or this move to the downside. Again, another one that has been complete bearish since the beginning of February, when we turned in the beginning on the 2nd of Feb. So it's a full month of bearishness on gold, similar to the euro, similar to the indices as well, and so on. So yes, question mark is, where are you going to find a little bit of that level that can push gold a little bit to the upside? So let's see where that's going to occur. It's going to be somewhere around this level of structure, even below these lows. It's something to keep an eye on. So again, maybe when the dollar turns as well, maybe you can see gold moving a little bit to the upside. We have oil as well, how the situation, and oil, as we have seen, it's literally within this range between $83 mark and the $70 mark, right? So it has been moving up and down all the way in here. With respect to now kind of the demand in here, it broke a little bit those highs. Maybe price can just continue to go higher again and then maybe down. Let's see for how many more weeks we are going to stay within this range. The fears of recession with these potential future hikes from the Fed. On the other hand, the tensions, the geopolitical tensions that are going on with China, US, with this Russia-Ukrainian situation. On the other hand, maybe one of the reasons for the WTI not to completely sell off is because of China coming back after all those months in the restriction due to COVID last year. So that's one of the reasons, maybe the demand side from China, that is managing to keep oil within this range. Otherwise, maybe I've already seen kind of a more move to the downside in here. So yes, looking at crypto. So what do we have? A strong move upwards last week, right? Price broke those highs from August, BTC breaking above this 25K. And after that, we start seeing some kind of rejection in here, a lot of sell pressure, and we finally kind of managed to move a little bit to downside. So now kind of the zones that you're going to be looking for is in between this 21,300 mark, where price kind of created this last swing to the upside, and the highs, right? So highs that we just broke. So kind of may have opened the door a little bit to the upside to go closer to that 28 or 30K mark. And meanwhile, BTC can actually move a little bit to the downside before continue the rally to the upside. This for me is kind of just opening the door that it wants to go higher, but price can literally still move a little bit lower before it resumes to move upwards. I'm still even keeping an eye on that level in there. This level in here can be interesting. Of course, to the test of these levels can be interesting as well. And Ethereum, a little bit more of the same. Personally, again, I'm still looking for price maybe eventually to go a little bit closer to these levels, to go above this highs, maybe before a good turn. It has been moving in now this kind of compression move, just took the lows in here. So let's see what kind of demand we have in here. The price is reacting already from this level. So let's see what's going to happen in there. Yep, maybe something in here can still hold price down, but eventually I would actually like to see price going somewhere in there before turning. We just took these lows. This can be a good indication for the future as price can go move a little bit further down. But for now, this is what we have. Similar to BTC, we have kind of this range now that they are playing in here. Yeah, there's maybe opportunities to still look for long sales in between this range. And let's see if we're going to create a new high for the year on Ethereum and BTC. And that's it for me, guys. So thank you again for watching. If you have any comments, feel free to comment below. I'll see you guys next week. Wishing everyone a great end of the month and a strong start of March. I'll see you guys next week. Thank you so much.